Hi guys, Harry Yotis here. I've been a professional trader for 20 years now. Started way back in 2005 and still going strong today, right now in 2026. So let's get started with the daily market update. Picture of the S&P 500, daily chart SPY. This green candle right here is Tuesday, January 6, 2026. The big news of the day is the global resource war continues. We'll get to that later, and we'll get a little bit more specific on some of the stocks that I'm looking at. But first, we always look at a technical picture of the SPY. Okay, it's important to know which way the direction of the market is going because you need to have that tailwind if you want to go long stocks. Okay, so today we just closed at new highs. Take a wild guess what you think I would say the technical picture is looking like. Yes, bullish. Okay, we don't even have to bring in the moving averages. Again, all the 50 days is the red line right here. The 200 here is the other blue line. Those are the two most important. The rest are short term. Who cares? The most important thing is that all upward sloping, all closing above the 50. So we know that given the moving averages, we're bullish. Let's hide that. But the fact that we close at new highs is bullish. Okay, we mentioned yesterday that we are seeing here a very bullish volatility contraction pattern. Okay, if you will, on the S&P 500. Here we see this down move here is more severe than this down move here, which is itself more severe than the third one. Okay, like the volatility of the down moves and the severity of the down moves are decreasing with time. Okay, this is very bullish, and I said it yesterday. I suspect that once we close above the highs in the SPY, we can really rip higher because this is a very bullish pattern. So, technically speaking, very bullish, especially if you close at highs. There's a Wall Street adage that says, "Don't short new highs." Okay, so as usual, we don't just look at the technicals; we look at the sentiment as well. And CNN Fear and Greed Index, we're at neutral. We're not even at greed yet. So yes, the momentum is slightly greed, but everything else is neutral, and all the sub indices are neutral fear. And look, put call options are still at extreme fear. People still betting against the market. We're at neutral. We haven't even touched greed, and we haven't even stayed at greed for more than 2 days. Okay, we need to stay here for weeks. Okay, for me to get worried on my bullishness. So this is very, very bullish. The sentiment is telling us we have a lot more room to go. The technicals are saying this pattern is very bullish, and we're getting anecdotal type of news data. For example, here I pulled something out of Zero Hedge here today. They said that the resilience of the U.S. economy is showing signs of cracking as the U.S. services PMI disappoints here. We looked at the S&P Global. That's the company that made it. The U.S. services PMI was at 52.5 versus 52.9 expected. Anything above 50 is expansionary, so this is just a little bit of a drop. Who cares? It's still going higher, and yet the point of this is to sort of show the sentiment as we keep climbing to new highs. We are not euphoric at all. They're trying to have some kind of negative signs of cracking. There's no signs of cracking. Yes, we're going about the growth in this economy slowly, much more slowly than normal, but it's still growing. Okay, so you want to see this as a sentiment indicator to show us that all the bullish signs take off. Okay, we have good fundamentals. The economy is still growing, albeit at a slower pace. We have the good technicals. We have the volatility contraction pattern. We have a close at highs, and we have negative news still at highs. We should be euphoric here. We're not. So this is, to me, is all bullish. Okay, so let's get to the big news of the day. Well, it's the big news of the entire year, as far as I'm concerned, and bleeding the entire year of 2025 and bleeding into 2026. And I see no end. It's the global resource war. Okay, we saw that here. The U.S. seeks to tap Venezuela's vast oil reserves after its military strikes. But it's not just that. It's not just the U.S. seeking Venezuela's oil. They're seeking all of its resources. It's gold. It's base metals, especially. It is the Orinoco Belt is very, very rich. Venezuela is one of the richest resource laden countries in the world. definitely the richest in South America, and the U.S. covets that. But not only that, we had some other news today in the morning where China slaps export controls on Japan for dual-use items, rare earths, and semiconductors. So the war between Japan, well, it's always been a tension between Japan and China because they have disputed islands that they both share. And yet Tokyo came out a while back and said it doesn't like how China is still saber-rattling vis-a-vis Taiwan. So China slaps export controls on Japan for dual-use items. Dual-use means that both an item that can be used for civilian uses and for military uses, okay, like rare earths or silver. Okay, so just telling you that the global resource war is continuing, and I don't see it abating anytime soon. Okay, I mean, let's go to our go-to metric for the global war on resources is gold. Yesterday we had a good move. Today it's continued this up move. The RSI is still well within normal range. You can get overbought. We're not even at overbought yet, and we're looking to break to new highs, close to it. We're approaching the highs of 453-ish, let's say. I mean, 4,530-ish. This is gold. Okay, so here it's showing in gold. It's showing up in silver today. Big move in silver, closing new highs in silver. $81 an ounce. This is huge. Okay, everybody wants to short it here. Everybody thinks this is a parabolic move. It should get done. No, because the fundamentals haven't changed. We might get some pullbacks. I was hoping it would pull back to this level here. The 62.5, the 65, it didn't. It might run away. I might have to move this up. We'll have to wait to see when the crack happens and then starts consolidating sideways before entering. Like here, like after this big move up in silver, it peaked in October of 2025. It made a move sideways, and this is what I'm looking for, okay, to get back in or to add some shorter term swing trades. I'm still holding my long-term positions on silver. But a little side metal that is breaking to new highs and that I want to get into today especially is copper. Okay, copper, it too has broken into new highs yesterday. This was the high that it made during the Trump tariff scare, where people were front-running the tariffs and buying copper, onshoring it onto the States. But then when that tariff was eased, boom, it crashed. But I was saying here, guys, it's not over. This is still, the war is going on. There's still a long-term shortage in copper, and you want to be in it. And yes, indeed, we did get in it, but we got out of the last piece around here. Okay, we got in it around these levels, and we got out of it around here. It doesn't matter. This is just a copper swing trade that I got out of. I'm still holding some copper miners. Okay, so copper is telling you that something is afoot. Okay, the global resource war is going on. So how would you invest in copper? I mean, you can buy the miners. Would you invest in the majors? Freeport, McMoran, that's at highs, trading at 56, broke out and still look at this 2-day move. These are gaps up. Incredible move on even the majors. Okay, then you have like some kind of mid-tier stock like Southern Copper. That's another good one. Okay, this is about like multiple billions, 100 billion company with a Southern Copper. And then you have like the smaller copper players like I like Arizona Sonoran Copper Company. This one made a move, as you can see. It broke this key level from inception. Since 2022, this company is doing very, very well. It's about $1 billion. It's worth about $1 billion right now. It broke the key 250 level and now doubled in price to $5. Okay, what about the juniors? Like, if you don't, it's very difficult to get into the copper space because the majors. I mean, you can just buy the majors. You'll make good moves, but in terms of comparing it to the gold and silver space, where you can make 10, 20, 30 times your money, you're going to have to really go into the juniors. Okay, and the juniors. I mean, there's not a lot of them, but I mean, if you don't know how to value individual juniors, you can go to the Sprott Junior Gold Miners, COPJ, and buy that. As you can see, as it broke above this key $26 level, it kept running. It's now at 43, so it's doing very, very good. Not as good as some Arizona Sonoran that we just saw that doubled. But the COP-J is still a good alternative if you want to buy the juniors. I got a message from a friend that says, how do I value these companies if I want to get into this space? I mean, it's not very clear on how to play this game. Well, valuing copper companies and any kind of metals company is slightly different, okay? You have to look at the asset of that company that it has, and then you have to value it based on that asset, and then you have to see what that company is trading at in the market to see if you're getting a good deal, okay? So I took a little snapshot of a company that I have, a junior company, okay? You go look at the presentation and you see that this company has an asset. It's a very small junior copper company. It has some gold too, but mostly a copper company in Canada, okay? And how do you value it? Well, this copper company is very difficult to value. Unless they have some kind of metric, some kind of preliminary economic assessment, it's very tough to value them, okay? You have to go by guesses and historical valuations of, pre-feasibility studies, okay? So what you're looking at here, I know it's a little bit complicated, but bear with me, okay? This is a PEA. It's called a preliminary economic assessment of the resource that this junior company has in its claims, okay? And this PEA, preliminary economic assessment, was done years ago, okay? And what you do in a preliminary economic assessment is you see that if we were to build a mine on this property, how much would it cost and how much would it return in money towards us, okay? And then we value it in today's dollars, okay? So what we do is we take this company, we see that it has X amount of copper in the ground, okay? And then we were to build a mine. How much does it cost? Look at this section right here first, okay? This case, okay? Just gonna erase it. This is what we're looking at right now. I'm gonna erase it. Okay, just for now, to show you what I mean, okay? The base case, what you do is, we were gonna build a mine on this company. We're gonna have a 9-year mine life, and it's going to cost us $220 million to build this mine initially. And there's going to be some sustaining costs as well, but just to keep it simple, okay? If we were to build this mine and we assume the price of copper is $3.75 for the 9 years, and the price of gold, because this company has about a little bit of gold as a kicker, and we assume the price of gold is $1,800, what would be the total value of this project? And silver, sorry, at 22. What would be the total value of this project if we were to build a mine that has a 9-year mine life based on the resource? It's going to cost $220 million, and these are the assumptions we make of the metals prices going in. Well, they discovered that it's going to be worth $324 million net present value. Net present value means the value of this mine today, when this assessment was made, okay, when the preliminary economic assessment was made, okay? So they did an assumption of $3.75 copper. If you saw before, the copper price right now is over $6, $6.06, okay, right now. They assume that if copper is at $3.75 for 9 years and gold is at $1,800, gold is at $4,300, okay, that this project is worth $324 million today. Okay, this includes the initial capital cost and all sustaining costs. Okay, so it's actually going to be it's going to generate $44 million minus the initial investment. You'll get $324 million. Okay, after tax, it's $230. Okay, this is the base case. But what if copper was $420 and gold was $2,000 an ounce? Well, now the NPV is $475 after tax, $330 million. Okay, so this project, if gold was $2,000 and copper was $425, in 9 years, you're going to get the equivalent of $330 million today, in today's dollars. Okay, $330 million today after tax. You know what this company is trading at today? I'll write it right here. $40 million. So an asset, it has an asset that if the mine is built is going to be worth $330 million after tax, and it's trading for $40 million. And that's at $2,000 gold. Imagine $3,000 gold. Okay, they did a sensitivity analysis here. Case 1 shows it's worth $475 million, which is like 425 copper and 2,000 gold. This is the gold price and this is the copper price. Okay, you can go at $5 copper here. $5 copper. Right, let's go back to the highlighter. At $5 copper and 2,200 gold, it's going to be worth $670 million. And the price today is 4. So you're basically at prices that are supremely low. Okay. This company has an asset worth very conservatively $500 million and it's trading for $40 million. So basically you're buying the company for a 10% discount right now. This is why this is the undervalued nature of how you should be looking at things. This is how you invest for the longer term and make 10, 20, 30, 40 times your money. Okay? So that's just a little primer on what you should be looking at if you want to invest. But if you can't do that, and this is too much of a hassle for you, then you can just buy the junior ETF here, COPX, and you should do okay. You should do okay. You're not going to get 10, 20x, but you can get, 3, 4, 5x if things go nuts. So that's it. Let's recap. SPY. Super bullish. Closed at highs. Nothing more to say. Okay, we are super bullish, and we have negative news. Signs of cracking. The U.S. economy is going to die at the highs. Very, very bullish. We have a global resource war that should continue for a long, long time, especially after the Venezuela move. Okay, so you have global resources like gold ripping. It's not going to go down unless something really changes. It could consolidate, could make these brief moves down to bring the RSI to neutral, but then you want to buy. Okay, you have silver doing the same thing. Okay, so I'm waiting for it to come down. I don't know if it will. Of course it will. I'm just exaggerating. But yes, silver is the same thing. And copper, all resources that have some kind of strategic value are being fought over. Okay, copper at highs. And we looked at our junior miner example of how you should look at investing for junior miners. Okay, all miners, doesn't have to be junior, but I'm just telling you, this is the kind of deal that you could expect in the junior space if you look very closely. Okay, so that's it, guys. If you like what you heard, of course, like and subscribe. And if you have any questions, let me know in the comments below and I will answer them as quickly as possible. It's a pleasure talking to you. And let's see tomorrow and the rest of the week if this move continues. I suspect it does. Bye, guys.